Welcome to Trading Lounge and the US indices for Monday, May 30th. I think you may have a holiday over there today. I did see a headline, but I haven't double checked it. Don't worry about this count too much. I'm just looking at the indicators here, the stochastics, and we can see that in these other important dates here that we were at some lows here, and I think we're at the same here again as well. And I think that we're going to be pushing up from this point. However, as always, we need to gather the evidence, and sometimes we know what the small count is, and they're the things that we need to trade, even though we may not know the big count. So you need to choose where you play and how you play and so on. Yeah, so let's go in a little bit closer now and have a little look at where we are with this. This is the daily count. Now I have changed the count down here a little bit. I've got all this as wave 1 and 2 here, and 3 and 4 to this point here, because on the cash market, on the SPX, this point here is higher than this one, and then it gives me a nice wave 1 here and 2 here and 3 here and 4 here and 5 here. Even though there is a bit of an overlap on 4 and 1, I'll soak that up. But now the point here is that we need to have a look at the bearish count and the bullish count. So this is the bullish count, and we'll go in shortly and have a look at how this is progressing here. But in a nutshell, from this low here, we want to be able to establish 5 waves up here. But even once we establish those as 5 waves, it doesn't remove one of the or a couple of the bearish counts, which we're going to look at. So the way that we'll get away with this is that we can continue to be long until we've got our 5 waves done and dusted, and then after 5 waves we'll either have an ABC pattern or we'll come down further. That's just the reality of it, without having any opinions about anything, just based on the theory. So we will be looking to continue to be long in here, and we'll take a closer look at that. And then if all goes well and we have 5 waves up here and we get an ABC pattern here, well then we'll go long above the B wave here, and if that's the case we'll be up at 5,000. So I think you need to start thinking about, even if you're a shorter term trader, if this proves correct, this will be an A and a B and a C wave here. If we go long above the B wave, it will already be trying to build in a little bit earlier through here, you know. But once that's done and dusted here, then you really need to, you know, we should have a pretty nice run all the way up to these highs in this instance, and we'll end up being up here further at that point. So yeah, I think we're in for some interesting times. The stocks are telling me that we're going higher, and the reason that I mentioned that we're bullish the other day is because when I look at the European stocks, and more so the European indices and the Asian indices, they've already had lows in for quite some time, and they've just been waiting for these oversold tech stocks. You know, they were pumped up in the COVID, and now they've been dumped heavily, you know, and we can see from Shopify that there's a lot of volume coming in into the play now with all of this. But I'm not going to look at that at the moment. We're going to look at we've been looking at the low volatility stocks, and this is just one of the iShares ones here, where daily chart here, that we can look at this as the A wave, ABC for the B wave, and 1 2 3 4 5 here. Yeah, there's overlap on this as well, but yeah, so as an ABC correction, that's all looking pretty good. And you know, it's very difficult to call this wave 1 over here, by the way, you know, that an A and a B and a C for wave 2, because wave 2 is much bigger than wave 1, where that's not normally the case, you know. So yeah, so the low volatility stocks, and we track Berkshire Hathaway, and we've been long on that. That was one of our first ones that we went long on. And yeah, so we've got these, we've got the European indices and the Asian indices that have had lows in for quite some time, and just really waiting for the the tech stocks to sort of rebound in a way, you know. So we need to have a look at the bearish side. Okay, so let's go and have a look at the bearish side. So let's, where are we? I've got it over here somewhere, and I'll need to probably bring in some more data. No, that's okay. Now there's two bearish counts here. Okay, let's start with the most severe one, and this is from Elliott Wave International and Bob Proctor's crew, and they're saying that there's some grand super cycle top in play here, with wave 1 here and wave 2 here, and then down for wave 1 here, and then coming back for wave 2 here. I don't know if they got this kind of construction here just yet, but basically 1 and 2 and 1 and 2 here, I guess. And that's a valid case, because we can look at this here as an A wave here, an ABC for the B wave here, and then 5 waves up here for that. So that would be one count. The other count would be that we could look at all of this as an A, B, and C here to make an A wave, so to speak, and then going up for a B wave and then having a C wave here, rather than having the end of the world, So I think that it's always important to be open-minded and gather all the counts that that are reasonable, and then just start working through them and eliminating them one by one. That's taking a practical, rational view of the situation, and that's what we need to do. So to confirm that the market is going to be bullish, then from this low here, you can see that we've got wave 1 and 2, and we'll take a closer look at the rest of this in a moment. But in a nutshell, we want to have a look at 1 and 2 here, and then all the way up here somewhere in for 3 and 4 and 5. The market will always stall between, the previous high and low here. I've got it from this low, not that low, from this low, because that would be the corrective pattern at that point. And there will also be the 61.8% too, that from this high, from that high to this low, and also to this low is here. So there'll be a whole lot of things in those areas there. So, and then we also take this top here and this one here, so that's that 61.8%. And so anyway, there's a few of them around at this point. So, but if we were looking at this as a corrective pattern, we would have to take it from here as the A wave, the B wave, and the C wave. So you can see quite clearly that we've got 1 and 2 here. We'll look at this in a moment, as I mentioned. So once we've got 1, 2, 3 here, and then 4, and then 5 here, we get to the top here, we can continue to trade long up into this space. That's not the problem. When we get to the top, you can even short it if you like, because we don't know what's going to come after that, do we? I mean, we actually don't know. So this is where we need to be a little bit careful. So if we were looking at it in the bullish count, we would be looking at this as wave 1 up here and an ABC back for wave 2 at this point. And if that's the case, we'd go long above this green. Well, it's not green yet, but let's just make it green. This is where we would go long from. That would be a move above that B wave high would be the evidence. So it would have an impulse wave down here, and then a move up and a move down as an ABC, and anything above that, we would be bullish at that point. And that becomes important, because that will take us, I reckon we'll end up at 5-3 in this run here. So if we're going up here, we'd end up somewhere up around here somewhere for that. So we want to catch from wave 2 here, we want to trade it all the way up to here. We want to take part profit at 4,800 and the rest of it at 5,000. That's pretty much what we'll be looking at. Where does that come in there? Close enough to where we're going. So let's not be, influenced by emotions. Let's just, we know that this is an impulse wave, so we can continue to trade up here. Once we get to the top, we'll just chill. We can look for some short trades in amongst all of this. There's plenty of space for all of that, but this is where we can look to be seriously long. But I will also be building in long trades in this little bit here, depending on how this looks, because one of the things that we can do is that if wave A is normally quite sharp, so we'll just put that a little bit sharper, and then wave C, wave B will be wave B. Hopefully, I mean, if it's going to be wave 2, it's going to be simple and sharp. If it's wave B, it could be simple and sharp, or it could be sideways and complicated, and that would tell us, if it was sideways and complicated, that this would be an A, B, and C at this point. The other thing that we can look at is the personality structure of wave C. If wave C is on more of an angle, see how wave A is sharp, if wave C is on more of an angle, that will also tell us that we're bullish at that point, so we can start to prep a little bit earlier and get ready and build in and so forth and so on. So look, they're the two situations really. I mean, that's all of it on the table. That's the good, the bad, and the ugly on the table. Like I said, my bias is to the upside, and that's based on low volatility stocks that are not tech stocks, and also the European indices across the board, and also Asian indices from the Hang Seng to the Nikkei to Australia and so on. So yeah, that's sort of it. So I'm sort of slightly biased more to the upside, but look, I've been wrong many times. Everybody's been wrong and right, so that's why we just really need to stay with the evidence. Based on that, this is also being counted differently here now, so I'll just put that there, that's there, and oh well, that's the bearish count anyway, so it doesn't really matter. But let's go to the 5-tick chart. So this is my bullish count, and we can put that as wave B. Keep it simple, wave C, that's right. So I've got it as 1 and 2, 1, 2, 3, 4, 5 here. This wave 4 here is higher than this one on the cash market. So I've got that nice 5 waves here, so I'm happy with that. Corrective wave here, happy with that. 5 waves here, happy with that. Wave 4 here slightly overlaps wave 1 here. I'm happy with that, because I know that we're at large numbers here and so on. So yeah, so wave 3 here, and I can see on stocks, most of the stocks have finished with a nice 5-wave structure down here. And then when we're pointing this out here as an A wave and a B wave here, or WXY, or whatever you want to call it, on stocks, and if it pokes out anything like this on stocks, it just fits such nicely as 1 and 2 and 3 and 4 and 5 here. So I kind of got to go with the stocks, because they're really creating this to a large extent. I mean, of course, there's derivatives that wag the tail of the dog, so to speak. But yeah, so anyway, what we're looking for here now is really, you can see we've got wave 1 and 2 is clear. You can see that we're in this strong 3rd wave to the upside. So at some point, we just say that we're going to have a 4th wave at some point, and then a 5th wave. Now the 5th wave won't be very long, because the extension's in wave 3 here already, So wave 1 here, and wave 5 will be roughly the same. It'll take us up to around the 4th 3, all said and done. And then we'll have an ABC correction that will probably come down to, knowing my levels and things, maybe 41.50 sort of area, and then looking to push up at that point. And this is where we need to be, this is where we need to be. Look, we could be wrong and we could be right, but if we're going to play to win, we need to be organized, and you need to have a plan in mind, and you need to execute that plan. So that's what we're going to do. Yeah, so that's that. Let's just pull this apart a little bit further. So I'll probably readjust this tomorrow. I just want when the market comes back online after the holidays things. Don't need these little sub levels in here at this point. I'll leave the other ones, but I think that we've got some sort of wave 3 and 4 to come in here, and then wave 5, and then wave 4, and then this wave 5 here. So I think we're somewhere in this space. So I think for day traders are on their own. They need to do what they need to do. But short-term traders, I think we can go to the 4,300. Now there's going to be, you could take some money off at the 4.2. There'll be some sort of classic trading levels pattern at the 4.2 to make up that wave 4. So there'll be the arrival, the reaction, the first high above the level. There'll be total confusion here basically, but if you kind of see this pattern here, it will give you a little bit of guidance, and you can think about this a little bit, because you probably don't want to buy this low unless you're going to get out here, but you could buy this low, and then buy this low over here and start to really, build in over here again, if that's going to be the case, So we'll look at that through all of that. So, but that's kind of where I think we are at the moment with this. And if this was, if this, the other point here from the low here, if this was going to be an A wave and a B wave here and a C wave up to this point, it'll be at wave 3. That's another way you could look at the market failing at this point and coming down at that point. But that should take us pretty close to where we need to be there anyway. So, but anyway, just looking at all possibilities. So that's that really, and the NASDAQ's going to be much the same, and so is the Russell really. So let's just the NASDAQ here. I've got it here as an A wave here, a B wave here, and a C wave up here. So I've got it 1 degree smaller with 1 here and 2 here. We'll need 3, 4, 5. If you're trading long up here, then taking some money off at 12,800. I mean, I'm normally the 72 man. I would normally take it at 72, but if you haven't taken it on Friday, well then that's okay. It's still going to fluff around here and continue to push up. It's not finished yet. And this would be, even though taking the money off the table at large numbers like 13,000 is never really the high, because it could come another couple of 100 points up or whatever the case. But sometimes, even if it comes, what normally happens is that you think the market will come up here, it will hit here, do some sort of correction. You haven't taken the money off the table here. You didn't do that because you think it's going to go higher, and you're right, and it does go higher here. And then you think, should I get out or won't I get out? And most people tend not to get out. And then suddenly you're back here again, and then you've seen the bounce and you're hopeful, and then suddenly the bounce is just not there, and then you're back here again. So it takes you through a really big emotional roller coaster if you don't take the money off the table here. And I know from years of experience, you're better off taking it here, so you don't have to go through all that stress. And at the end of the day, you find out that you actually make more money if you just, play to the big numbers all the time. And because then you could be using your intellect to be doing other things, So, but anyway, that's just my humble opinion. But that's where we are for the NASDAQ, and much the same for the Russell. Now, the Russell was also one of them. And also too, not just the Russell, if I can just come back here, if I go to the mid caps here, the mid caps were the same as well. I've got another chart somewhere on this, but the mid caps here are the same as well. You can look at this as an A wave, or even an A wave, B wave, and C wave to here. That's quite nice, isn't it? So it'll be interesting to see how this plays out at its 61.8% here. We'll keep an eye on this with the low volatility stocks. We'll see how that travels at that box. Let's just put that in there. Let's see what we get here. See if we get an A and a B and a C wave and fails at that point and comes down. Well, then we'll know that we'll have to look at that as wave 1 and 2, and then coming down for a bigger move at that point. But let's see how that goes. Yeah, so the Russell and the mid caps, the S&P 400, pretty much got the same count. So down here we can look at this as a nice little 5 waves here to finish off, and then 1 and 2 and 3 and 4, 5. So we've got this impulse wave here. So we knew about that. So we took the second high out here, or the B wave high. We could have, either way was okay. But so we end up taking it over here for that. Not the best looking trade at that point, but doing all the right things at the right time. I mean, of course, we could have done better, in moving up here, but I'm not that focused on this market, but it's just an ETF. So what you need to decide is that this could be an A wave, a B wave, and a C wave here, where that is. So if you're long in this market, you'll need to decide to either move out in the box, take part profit, or take it all at this point, and then wait to see if you get 5 waves up. So we'll need 1, 2, 3, 4, 5 for the third wave, and then the fourth wave and the fifth wave. And if we do get 5 waves up, it's not a big deal, because we'll end up just getting some sort of ABC again here, and then moving up again. Keep on going at that point, So the futures contract, the Russell, I haven't filled in all the little dots here. I wasn't sure if that was 1 and 2 and 1 and 2 at that point. So 1, 2, 3, 4, 5. So if that's the case, there would still be, let me think about this, there would still be, that would be that one, and that one, and that one, and that one, and then that one. So there's still more to go here on this. So put that there, that there. That would need to go there. That would be 1 and 2. 1, 2. No, that's not right, is it? Let me just push that out. So that would have to be 1 and 2 here. And that would be 1, 2, 3, 4, 5. So that would be 3. Oh, yeah. Not far wrong. It's very difficult for me to count to 5. So this little, where's that little wave 3 there? So it would be something like this. So we're going to get a whole series of things here. So it's going to be a tough old race. But if that was corrective, so we'll probably get pretty close to the 2000 in that case. That would kind of make sense, really, because it's normally the third wave that hits the level, and then you've got the fourth wave, and then the fifth wave here, and then the ABC. So yeah, what you see here is not what you get next, okay? So there's going to be a series of 3s and 4s that will play out across this, this high here and the 1900. So if you're staying long to the 2000, you need to have a wide stop and less money in the market, because you're at the sort of, this was the middle of the trend. You've got this is all the beginning here. You're in the middle here. At the middle of the trend is ending, and you're in the ending of the trend. You're now here. So it's okay to have a lighter amount in there so you can breathe. But you need to have a wider stop and less funds in there. But this is where we're going to be more interested over this side. Alrighty, I'll leave it all at that, and we'll just keep piecing it together day by day. Alrighty, cheers.